Hello everyone, my name is Matthew Fraley, founder of BreakpointTrades.com, founded it 22 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and mechanical trading systems. It's been about a week since I did my last YouTube video, and that's another reason to consider subscribing to our service. Since that time, we've had 5 detailed newsletters, actionable trade ideas, active community, etc. You miss all that just being on YouTube. But anyway, markets not had a good time the last couple weeks. Not a good day today. A lot to discuss, so let's get started here. This is our backend recorder for our website subscription service, and I'm going to start that recording right now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Monday, March 3rd newsletter. As you can see, newsletter is divided into 9 major sections. Now, as far as the market, as you know, absolute bloodbath today. Following Friday's big reversal and big 100-point up day in the S&P, completely gave that back today and then some. Fridays are never a good bottom for the market, and that ended up being the case once again. Again, absolute bloody red today. The market did bounce back a little bit the last 15 minutes, but again, it was quite a nasty day. And Nvidia was down 9%. Bitcoin, as you know, there was some news on Sunday. The Trump administration, it initially had a huge pop, and then it dropped. Market futures were actually up in the morning, had a small gap up, and then that was quickly faded and sold off the rest of the day into the close. The problem with the market, it's kind of like a perfect storm we've had. First off, the markets had back-to-back consecutive 20, 23, 25% up year. So it's due for a consolidation year after 20 plus percent gains back to back. You're due for that. We were overbought. You could count 5 waves to the upside a couple weeks ago. The VIX Bollinger Bands were compressed. So everything was set up technically for a pullback. And then on top of that, you have all this uncertainty. And again, I don't want to get political here, but even if you are 100% on the Trump MAGA side, there is a lot of uncertainty here. Every day there could be a surprise new tariff and an add to existing tariffs, something out of Ukraine, Doge, Bitcoin, it's all over the place. Never really felt anything like this before. And that's what's really added to this uncertainty. And even though S&P is now down, pretty nicely from the highs, but what is it, down 6.5% from the highs? It feels a lot more than that. Okay, it feels like this uncertainty. It feels like you could cut it with a knife, like being in a very thick fog. But anyway, so today we had an ISM, and markets didn't like that. Not a good report. It's clearly things are slowing down. In fact, the Atlanta Fed now forecasts a negative 3% GDP growth in the first quarter. We're looking at potential stagflation, something Steve and I have talked about. So, it is what it is. And this week, news items. Tomorrow we have ADP ISM on Wednesday. Now, jobs report, that's the big one on Friday. All right. And of course, again, like I said, any random new tariff or whatever could come out of the administration. So a lot of things here. All right. And also on the weekend, hopefully, you guys listen to the weekend newsletter. So Steve talked about how he said on his weekend newsletter to watch for the market indexes to stall at the overhead moving averages, particularly on the S&P 500 around the 9-day exponential moving average and just below the 50-day. Well, that's exactly where it ended up stalling out right away this morning, right at the 9 EMA, a little above it, and just below that 50-day moving average. Nothing good happens below the 50-day moving average, and we saw that today. So again, now in the market, the 200-day moving average is just a stone throw away in the S&P 500, about 120 points currently. Since that moving average is moving higher every day, tomorrow perhaps it's only 100 points. That's basically one big candle, and the Qs are even closer. All right. We've been looking for a potential larger fourth wave pullback, at least on the S&P. Something I've discussed on the weekly charts. I'll go over that again tonight. Again, there was a lot of warnings prior to this. We had various divergences on breadth indicators. We had very compressed Bollinger Bands on the VIX 2 weeks ago, and always led that has led to a sharp move up in the VIX. And of course, market hates uncertainty. So anyway, let's get started with things. So with the market pullback, we've had several mean reversion system take long trades. So let's take a look at those. So first image below, item number 2. So here's the open mean reversion system trades that I run on SPY and ES futures. So on SPY, we had the trend pullback system, took a first entry kind of early, and it's prone to be early at times. It doesn't always. You can see some of the past trades, that last two winners, there was just a single entry, they were winning trades. So this one is in a second entry last Thursday. Then on Friday we had a nice up day. That trade was actually up, and then of course today gave that back. This system's going to have a maximum of 3 entries, so should we get another move down, it'll take another entry. The QEBTS system had its first entry last Thursday, which is an excellent entry. It's only down slightly. It was up nicely on Friday. It didn't close out. It needed a little bit more to close out. What these systems initially look for is a move back above a short-term moving average, like the 8 or 9 EMA. I mean, we were above it intraday today, but you need to close above it for the systems to close out. On the ES futures, we had the QEBTS took a second entry, and the CCI system took a second entry. The QEBTS is in a first entry. Again, should we get another move down, we could see second entries on some of these, like the QEBTS system. Today we had the CCI divergence system go long, first entry on SPY. Again, this could have a potential of 2 or 3 entries. That said, this is one of my favorite systems. It doesn't trigger that often, and it has amazing stats. All the systems really have good stats, anywhere from 80% on the low end all the way up in the mid to upper 90 percentile range. Again, these aren't, these systems, when the market does this, it's not fun. They're buying into sharp pullbacks. Things feel like death, but ultimately they generally work out. Okay, we've went through these. These systems have been live for many years. They've always done well, but sometimes you go through instances where multiple systems take trades and they're scaling in, and you have to have the mental fortitude to do that. These are not easy systems to trade, even though they're highly profitable, just because of that mental. It's not, most people aren't set up to be buying into downtrends like this, but that's what they do, and they do very well at it. Let's take a look at next chart. So item number 3. So here's the open mean reversion systems for SPY and ES. So you can see on SPY here we have these open trades, and on MES futures we have the CCI first, second entry, QEBTS first entry. Okay, again, should the market go lower, we're going to likely see these scale into additional entries, maybe even some other systems take an entry if you get a really deep pullback. Hopefully we get a bounce soon, and again, it won't take much of a bounce to get these systems to start to exit. They're looking for a mean reversion bounce above a short-term moving average. Let's take a look at some of the statistics. So image number 4, here's the trade statistics to the SPY CCI divergent long. Like I said, this is one of my favorite systems. So profit factor of 256. Again, profit factors of 2 and 3 are considered good. That's awesome. 96.5% winning trades. Excellent profit curve. So one of my favorite systems. Again, this took a first entry long today. It can have up to 2 and 3. I don't know if I've ever seen 3 entries, but I've seen 2. So just next. Image number 5. Here's the SPY QEBTS system, which took a first entry last Thursday. It's still in a first entry. Again, still very excellent profit factor, 20.3. Again, 90% winning trades, 154 trades, excellent profit curve. Like I said, these systems are highly profitable, but they buy into downtrends like this when it doesn't feel good. That's their nature. And image number 6, here's the SPY trend pullback system. Like I said, this is the one that can be a little vulnerable to buying early on the first entries at times. But even so, this still has a profit factor of 10. That's still very excellent. 85.5% winning trades, 214 total trades going back to 1995. So again, long history, excellent stats. Like I said, the systems work out almost all the time. So again, no, it's not fun buying these in the pullbacks, but if you're following the systems, ultimately that's what you do. Next, let's move back to the general market newsletter. So item number 7, here's the index sector table, what transpired today. Again, bloody red. Look at these sell-off in the indexes. Dow down the least, 1.5%. S&P down 1.75%. Nasdaq down 2.5 to 2.6%. Same for the Russell. So as far as the 21 market sectors, not all of them were down, but the ones that were up were basically defensive. Consumer staples, healthcare, drugs, utilities. Those are all defensive sectors. Otherwise, bloody red on the others. Currency-wise, US dollar fell almost 1%. Cryptocurrencies, as you know, Bitcoin, absolute crazy action. Huge rally on Sunday night, went well into the 90,000 range, went up to 95,000, and you can see it's given all that back. All right, Ethereum's also down at the lows, down 50, almost 16%. Still, I have an uneasy feeling about Bitcoin just because, it's fine, but the stability of Bitcoin, I don't see using that as some, part of your reserves and all that, just because of the volatility. To me, it moves with the market. It's like an option or a leveraged play on the market. As far as commodities, mostly to the downside. Natural gas had a big up day, 7.9%. Crude oil down 2.5%. The index down 0.6%. Uranium really hit hard, down 5.3%. Agriculture, corn, wheat. So good weakness here. Now the precious metals were up with this uncertainty. That said, the stocks, the miners, were down, and they tend to lead short term anyway. So, but otherwise, gold and silver up nicely. As far as the bond market, we continue to see pullback in the 10-year, 30-year Treasury yield. But is that helping the market? Nope. And finally, item number 8 shows the economic news calendar. Like I said, today we had ISM, and it was pretty terrible. Market didn't like it, but again, it's not one thing that's affecting the market. It's like I said, it's a slew of things with all the uncertainty. ISM services factory orders on Wednesday, and like I said, the non-farm job pay report on Friday. That's a big one. We'll see how that comes in. And let's move on. Let's take a look at the chart. So first, this chart, item number 9, here's the unemployment rate. Now, I haven't shown this for a while. The last reading was 4%, but I mentioned this months ago that the fact that these two moving averages, the 5, crossed over the 13 moving average here, it's always been a great guide. When these two moving averages cross, tends to set a trend that lasts for years on the unemployment rate. The unemployment rate moves like a barge. It's not easy to turn, takes a long time. When it goes in one direction, it tends to go in that direction, for years at a time. And the fact that these two moving averages crossed up bullishly last year, I think ultimately unemployment rate is going to continue to tick higher. We're going to have a recession ultimately. Trump's going to have to deal with it, but it's inevitable. And it's actually been in the cards here even before Trump got elected. Next, chart number 10, here's Bitcoin. So remember, a couple weeks ago, I drew this rounded umbrella top. Just absolutely looks like a perfect umbrella top. I said it was a weak area here. Once it lost the demand zone, which it lost last week, fell through that support area, fell all the way, didn't quite get to that little small demand zone. There was basically an air pocket in here, which it fell right through once it lost that. Then, on Sunday night, the news out of the Trump administration, Bitcoin was up huge, but it ultimately failed, lower high right into supply, and then got smacked back down. Next, chart 11, here's Ethereum. Ethereum all the way back to the lows. In fact, trying to undercut the September lows, right around the August lows. So this is a roughly 50% haircut since December. My point with these cryptocurrencies, guys, these are not stable. They're not something that you can just sit in and hedge your other investments and these things, like I said, they're like owning options or futures. Very volatile. That's why I don't really support using these to back up, portions of the government. There's just, yeah. Anyway, that's a whole nother discussion, but definitely these are in the tank, especially Ethereum. And chart number 12, here's Nvidia. Now, a little rally back on Friday, but again, just a small one, was still well below that 200-day moving average. Huge down day to day. So there's a little horizontal support here going back to the September, January lows. But that said, your larger demand zone is now down in here around the 101 to 108 range. Okay. Wouldn't be surprised if it would at least fall into that area. The last rally, of course, stalled perfectly at that downtrend line. And chart number 13, here's the VIX. So the VIX, guys, remember my comments way back on February 12th. The Bollinger Bands were compressed on the VIX. So energy was pinched, was built up for a move. And you can see every time the Bollinger Bands have been pinched on the VIX, you get a big pop. They were really compressed last year in the July time frame, even more so than recently. And then it had that huge pop that went all the way up into the 60s. So, this was something to be, risk off, to something to be worried about, that the market was going to likely pull back. It was due technically. Plus, there was a lot of timing windows and, just like I said, a perfect storm. Anyway, this has been moving higher. Once again, closed outside its Bollinger Bands, upper Bollinger Bands today. Next, chart number 14, here's the S&P 500 along with the SPX XLP ratio. Remember, XLP tends to be defensive, and this was also given a warning sign a couple weeks ago. With this ratio, had formed a perfect lower high divergence, and so far it's been playing out. In fact, the ratio dropped hard again today, going back below those Bollinger Bands. Late last week, it was below the Bollinger Bands 3 consecutive days. Then we had that big Friday pop, and of course, big dump. You can see today's rally opened right at the broken uptrend line here and sold off. We'll cover that on the S&P 500 charts below when we get to those. Next, number 15, here's the S&P High Performance Daily System. It's a long only system. Again, this stopped out last week. It's in cash, so it's doing its job. Yep, not a great trade there, but it's caught a lot of really good trending trades. But it's flat and in cash, so if the market really were to dump here, it's at least safe. That's the whole point of the KISS systems. Next, number 16, here's the 4 time frames with these indicators, ATRs, cycles, etc. So at the highs here, we had the resistance cycle where the S&P is pulled right off of. We've been below the ATR in all the time frames, as Steve discussed on the weekend newsletter. And on the half-day chart, notice how price, when it made that slight new high, stalled perfectly at the ATR and the resistance cycle. But ATR resistance is above, guys. Bulls need to clear that. Next, let's move on to the S&P 500 chart. So here's the chart number 17, the weekly view of the S&P. So far, starting off down 1.76%. This weekly channel here, which goes back to 2023, we continue to hold it barely. We got a little Pinocchio move below it. We got a little small support here. But again, it's very vulnerable here. We'll see if this can hold. Chart number 18, here's the other weekly chart that I was showing way back in January and early February. Haven't shown this for a while, but this is what we were talking about earlier in the year, about when we were looking for the market to have some sort of intermediate high where we would form a wave 5 of 3 high here and ultimately have a deep wave 4 correction. Not an end of the bull market, but a deep wave 4. And I said at the time that wave 4 could be 500 to 900 points. Well, maybe that's what we're in. If that's the case, ultimately this could work much, much lower. Now, we should have bounces along the way. We shouldn't just go straight down to there. Should be some sort of ABC. But again, if we're in a deeper fourth wave, ultimately this thing could end up down at 5,600 all the way down to the low 5,000s potentially. Next. Chart number 19, here's a daily view. Again, you can count 5 ways up, guys. at those recent highs. So this could lead to a deeper correction. Now, short term, we're still above the 200-day moving average. We're not very far away from it though. Just one good down candle away. Chart 20, here's a zoomed in daily view. So you can see the uptrend line we've been showing. We broke that last Thursday, got into this demand zone a little bit. Huge rally on Friday, but the rally closed right below the 9 EMA. We said you need that 9 EMA and this 50-day in red would be resistance. Well, today we were up a little bit in the morning, stalled right at the end of the side of that 50-day and got smacked back down. Now, there is a slight RSI divergence here on the 5-length RSI, but again, onus is on the bulls here. If we have another good down candle, 200-day moving average would be a likely short-term target. Chart 21, here's a zoomed in daily view. Again, you can see this kind of coil wedge pattern. Look at the size of these candles since Thursday. Huge 100+ point candles. Very volatile, wild action. Next, chart 22, here's a half-day chart. Again, could have completed that wave 5 high up there. And now we're working lower. Again, you can see that last rally, the morning rally, stalled right into the supply zone. Chart 23, here's a half-day chart Steve showed on the weekend. We're still bouncing around this uptrend line in this demand zone. But again, unless the bulls get going, we could be looking at that larger wave C correction, like I said, down to at least the 5,600 area or lower. Chart 24, here's a 60-minute view. So we filled that open gap last Thursday, then that big rally on Friday, lower high, smacked down again, new low before recovering in the afternoon. Now we do have some MACD divergence. That is one thing short term we have. We'll see if we can get a bounce from this oversold area. Chart 25, here's a 30-minute view. You can see the morning bounce stalled right at that supply zone before absolutely getting dumped. That said, we do have a little positive divergence here on the MACD. We'll see if we can get a bounce from that. Again, a decent bounce, even if the market does go quite a bit lower. Let's say we're in that deeper fourth wave correction I showed on the weekly S&P. Even under that scenario, you're not going to go straight there, guys. You'll have a decent counter trend to rally up. And those mean reversion systems that have been scaling in, they would get out on that bounce. All right? So they will get an opportunity sometime to get out on that. Next, chart 26, here's the triple Q's KISS system. Remember, this got out, went to cash over a week ago. So far, that exit looks pretty good. Yeah, last two little losing trades in a row, but it kept it small, and it's safely in cash. Next, chart 27, here's the daily triple Q's. Again, you can see this wedge pattern, 5 waves up, playing out, and MACD divergence up there. Broke that uptrend line over a week ago, and today's move now into this larger demand zone down here could be a potential wave C, but you can see today's rally stalled right at the declining 9 EMA. There is a slight RSI divergence here on the 5 RSI. Chart 28, here's the 60-minute chart Steve showed on the weekend, this channel. I went ahead and left the lines here. You can see we got out of the channel in the morning, basically into a supply zone, and then just dumped. That said, a positive here, you could see a little MACD divergence on this time frame. Chart 29, here's a 30-minute view. You can see the morning rally stalled in that supply zone, but again, you can see the divergence forming. Chart 30, here's IWM small caps. Boy, they have been absolutely pummeled, well below the 200-day moving average, and they cannot catch a bid despite rates pulling back, which usually benefits them. Chart 31, here's a 2-hour view. Again, it continues to work lower. You do have a little MACD divergence here, but again, divergence is not a buy signal you need to trigger. All right, guys, that does it on the major indexes. Let's go ahead and move on. Chart 32, here's the 10-year Treasury yield. Again, it continues lower, but that has not helped the market, obviously. Chart 33, here's TLT 20-year bonds. A few weeks ago, we said these looked bullish, and they continue to work higher. That said, there's a little supply zone approaching up here. We'll see how it does there. Chapter 34, here's high yield corporate. Now this area, high yield corporate continues to hold up very well. Not really following the market at this time. Usually it's correlated with the S&P. Chart 35, looking at a few of these sectors. Here's XLK Technology, again, absolutely pummeled. Here at a little lower trend line, kind of an expanding coil, but whether it stops here or not, we'll see. You got the fibs here, 50% fib, 61.8 fib below that. Chart 36, here's semiconductors. Again, this area has been absolutely pummeled. Here, there's another little demand zone down here, but will it hold? I mean, there's no MACD divergence. Just doesn't look, just looks like death. Chart 37, XLP, again with the defensive sector, and this remains strong. Chart 38, financials. This did actually make a brief new high today before pulling back. This sector is still holding up very well, but it may eventually be taken to the woodshed, especially if the market continues to weaken. Usually the sectors that are holding out eventually get taken out too, kind of the last holdouts. Chart 39, here's the banks. They're weaker than the financials. As you can see, kind of a bear flag look. Chart 40, transports. Again, today's rally stalled right at that 20-day moving average before falling once again. Still above its 200-day moving average, but very choppy action here the last few months. Chart 41, home builders continue a bit pummeled. There was an open gap which was filled last week, and now they're declining once again. Declining rates not helping the home builders. And the energy sector, chart 42, here's XLE. It was kind of holding up here, but it was coiling, but absolutely got smashed today, breaking this coil. Not looking good. Chart 43, here's another view of XLE breaking that coil. Chart 44, looking at some individual energy names, they do not look pretty, guys. Here's ExxonMobil, absolutely smashed. Just looks super weak here, almost like a big bear flag forming. Chart 45, Chevron. Look at this ugly candle today, down 3.5%. That's a huge move for this. In fact, this is the largest candle, well, one of the largest candles on this chart. I guess there was a similar candle back in August of last year, but that's a huge sell-off. So energy names absolutely pummeled. Moving on to commodities, they didn't fare very well either. Here's DBC. This is the weekly view. 3 weeks ago, stalled at that horizontal resistance. Remember, it's been stuck in this range for the last 2 years. Chart 47, DBC on the daily. Again, continues selling off here, losing the 50-day today. We did have a little capitulation volume, or high volume, so maybe it's starting to capitulate a little bit. But nice pullback from that divergent high. Chart 48, crude oil, down again. It's kind of in a demand zone, but bulls need to hold it into here. Chart 49, natural gas. This is one of the few commodities that did well. Big spike today, up 7.9%. You had a little tight wedge here. And again, the whole macro change occurred on natural gas back in December when it finally broke and held the 200-day moving average. So since then, it's been uptrending nicely. Chart 50, copper. Actually up 1.3% today, actually holding up very well. Kind of wedging here. I'm surprised how well copper's holding up. Chart 51, DBA, agriculture getting absolutely pummeled. Hope you guys took profits in this a while back. It had been a really strong sector, but it's given that up quite a bit, well below its 50-day moving average now. And chart 52, here's gold, or US dollar. So US dollar was smashed today, but gold was up. Chart 53, here's gold, like it's a little rebound here. Today's rally stalling right at the underside of that 20-day moving average. Now you have the 9 and 20 coming into here. So ultimately, is this some sort of little fourth wave and then we get a new move to a new high? It bothers me that gold never did tag that 3,000 round number. It got really close within about $25. Should we get another rally up, I think that 3,000 is a magnet. Chart 54, here's the ETF GLD. Like I said, came into this demand zone, bounced a little bit. Chart 55, silver, nice rally today. So far, it's held this uptrend line. Steve showed it on the weekend. Kind of needs to hold this and these moving averages. So far, holding that. Chart 56, GDX was up initially today, stalled at this 20-day moving average, pulling back, but definitely didn't get hit like the market, only down basically flat today after giving the early gains back. The pullback found support at that recent high, lower high in December, so that became support. The other positive here is the moving average ribbon. It's bullishly stacked and it's starting to pinch. Usually these first pinch squeeze are usually a good buying opportunity, so I like this sector. And chart 57, here's the 2-hour view. Again, a nice correction from the highs. We haven't filled that open gap. That still could be a magnet. So far we have another lower high here in place. The bulls here need to form a higher low here and then try to rally again, take out one of these last lower highs. Chart 58, KGC. Here's a gold miner. Kind of watching this one. So far, it's held that 50-day moving average. Tight little channel. We'll see if it can pop out of this or not. And just following up on some other ideas, guys. I didn't add any new trade ideas. Not in this volatility. No way. But ORLA I showed early last week still hangs in here pretty good. Needs to take out that horizontal resistance right here. Chart 60, Tesla. Tesla did bounce last Friday off that 200-day moving average. It was worth taking a shot there, but today giving it up. The problem I got with Tesla here, well, it's many-fold. Number one, there's no MACD or RSI divergence. So it did get oversold. It hit its 200-day moving average. There is a support right here. But beyond that, there's no real divergence. So to me, this looks more like instead of a wave 5, more like a wave 3 of 5. So maybe this is a wave 4 bounce, then you come down again. We all know that, Elon's definitely has some issues to overcome here. Him being in the Trump administration, and there's a lot of people that are swearing off Teslas. In fact, European sales are absolutely in the toilet. So anyway, we'll see how that plays out over time. Chart 61, here's the weekly view of Tesla. Again, really nice haircut from that recent high. This is a larger demand zone down in here. Chart 62, here's Walmart. So Walmart last week bounced around that demand zone. That said, we got a lower high here. Notice the volume. Light volume on that rally. It looks like a bear flag. If you could be short with a stop, say, above today's highs. And here's a zoomed out view of Walmart. Again, Walmart's had a heck of a run since the 2023 low, right? But nice pullback. You can see it looks like a bear flag. Here I added some fibs. On a deeper correction, longer term, Walmart could come down to one of these fibs or 200-day moving average perhaps. And chart 64, here's BITI. That's the inverse Bitcoin ETF I was showing for the last couple of weeks. It did pop last week nicely before pulling back, but it held that uptrend line. If you were still long, that would be a good area for a stop. And rallied today. Still has that open gap above. Anyway, guys, quick check on futures. ES futures are up about 7 points, which is absolutely nothing. It's basically noise. So anything goes. We'll see what happens tomorrow. Again, and remember, jobs report on Friday. Again, have a good night. Take care.